This is Matt Duffield from mattduffieldtrading.com, and tonight we're going to do a hot penny stock analysis on DGLY and FORD. Those were the two hot penny stocks that I was watching today, and I made one trade on Ford anyway. Before I get started, this video is for informational and educational purposes only. I'm not a registered investment advisor, and neither is mattduffieldtrading.com. And penny stock trading can be risky, so despite my analysis, be sure to make your own trading decisions. Okay, so DGLY, this is on some traders' radar, but not a whole lot. So it could be a really good play for tomorrow. That's kind of why I wanted to mention it tonight, not just for the price action today. So as you can see, we've got a 1 minute chart, and here's the trading action for the day, this portion right here. As you can see, right out of the gate, this took off. That was the big spike of the day from, I think that's about 7:30, and it peaked at around 8:20 or 8:30 there. And then, the rest of the day was consolidation. I fully expected this to consolidate because if you go out to the daily chart, there's a lot of resistance right here in the $8 range. So to break through in the first try, the first day, that's pretty tough to do. Needless to say, I was watching this all throughout the day. Every time this touched $8, I was watching it, waiting for indications that volume was really strong and that this was going to take off. But that didn't really happen, so I didn't make any trades on this today. It is really thinly traded, as you can see. Look at this price action right through there. Very, I don't want to say choppy. Just when you start getting those dots on the chart, there aren't many trades popping off. So this can be tough. It can move very, very quickly. And there can also be a big spread between the bid and the ask. So the key is to wait until the breakout. That way, when volume comes in, the bid and ask will come closer together. You'll get a good price. And hopefully, you'll catch a move like this here or this one here. And you'll sell for a quick profit. So tomorrow, I would be looking for at least, if this can spike above this 810, 820 range, but ideally, if you want to play it safe, I'd wait till it passes the daily high, which offhand I'm not sure what that is. Say 830 or so. Because out here on the daily chart, if you look at this, once it breaks above 820, 830, the next possible resistance isn't until, a little bit at $9 and then at $10. So, this could be an easy 10, 20% gain, and it'll come very, very quickly with this. I think it's a low float play, based on this price action. I haven't checked the shares outstanding, but obviously it can move $1 in just minutes. Okay, so also Ford, that was the main play that I was watching today. This was kind of like my CLTX of last week. I'm just in the zone in this thing all day long, watching the 1 minute chart, the price action. So let's do a 5 minute and the 2 day. So yesterday it had that nasty sell-off in the final hour where it went from $1.60 all the way down to $1.30. And when it opened today, it just rallied straight away from $1.30 all the way up to around the $1.70 range. And I was watching this. I wanted to buy in. I wanted to dip buy. There's good support in here at the $1.30 level. I kept missing it. I kept waiting for a pullback. It didn't happen. Next thing you know, it's up to $1.70. Similar thing happened here. Got some consolidation. And I meant to point out, yeah, that's too far. Let's go to the 3 day. So yesterday we had this sort of symmetrical triangle form here. Those aren't the best trend lines, but they'll do. So a lot of times when price breaks down out of a triangle, it comes all the way down, tests support, there's a good chance it'll come back up and test this upper trend line right at the apex of the triangle. And that's what happened here. And I sent out a tweet saying, price tagged the apex of the triangle. And just from experience, I know that a lot of times it'll produce some consolidation and then another push higher. And that's what happened here. It got the final push higher to about $1.91 or so, and that was the high of the day. And once again, even though I posted that tweet, I missed that trade. Okay, so when price sold off, kind of formed this bear flag right in here, and then continued lower, I realized that this looked like an Elliott wave ABC zigzag. And that's very exciting. I'm still trying to incorporate Elliott wave into penny stock trading. I'm not perfect, but it's just another tool I try to use. I know a lot of other traders out there don't use it, especially with penny stocks. So I feel like it's just another tool to have. And what happened, basically, when you got the initial sell-off, that's the A wave down to here, followed by a slight, slight retracement into the sell-off. So this is an A wave followed by a B wave rally, and then the C wave is normally the strongest. It took prices all the way down. So anyway, I realized that this kind of pattern was setting up when it was about at $1.65 or so, and I calculated the A wave, which was about 28 cents, and I subtracted that from the B wave high, and it came to $1.52. So I know that's very deep. You got to study up on some Elliott wave to fully understand that. But I knew if it hit $1.52, that could be a good buy entry because that should be the end of that sell-off. So I did buy right in here at $1.53. I missed it by a penny, and price actually went a few pennies lower and then rebounded. And I sold at $1.66 on this spike here because this rebound was a little weak, and there was resistance right in here at the $1.70 level, so I was happy. I took an 8% gain. That was my big trade of the day. I was, thrilled to have that kind of trade. And then, you got some down action followed by a bull flag here, and then a pop in the end of the day to $1.81. So yeah, I mean, I could have sold much higher, but in this kind of market, I'm happy to take a gain like that and trade like a coward. So anyway, on the bigger picture, what I'm looking at for tomorrow here, and I'm also using Elliott wave the best I can, and also I noticed if you compare this to AVXL from several weeks ago when it had its big spike, the charts are almost identical. Let me get rid of this symmetrical triangle there. Okay, so here's a 2-day chart of Ford. Now take a look at AVXL, and we have to go back a couple weeks. So I'll do a 10-minute. I'm sorry, 10-minute of probably 16 days. Got to do 20. Might be hard to tell in this chart, but you got to take a good look at it. This right in here, starting here, this first push higher followed by a big sell-off, another push higher, which is what happened this morning on Ford, afternoon sell-off on Ford, and then a final spike, which makes me think that Ford might follow the same pattern. And it's not a coincidence. When I was watching AVXL several weeks ago, this was what you call an irregular flat correction. So it's another Elliott wave kind of pattern. So I mean, these patterns do repeat. You gotta be able to catch them. That's the key. So going back to Ford, 5-minute chart, 2-day. You'll probably have to back up the video and compare these, but I mean, the charts are almost identical. And what you have here would be a wave 1 higher, wave 2 retracement, wave 3 higher, followed by an irregular flat correction for wave 4. But I don't think it's complete. I think tomorrow this might be the high. It might hit a little bit higher, maybe $1.90. And then if it plays out identically to AVXL, it won't be able to break these highs of $1.91, and price will sell off very strongly, maybe to $1.40, $1.30 tomorrow. That's one option. I mean, Elliott wave is not an exact science. I try to follow it, so you know all possibilities. So that's one possibility. The other one is on the bullish side, because there's always two sides. If you get a break of this high, if this rally continues and you see a break of $1.92, this can easily just super spike higher like it did these times, these 3 different times. And I would say a price target of 220 is definitely a possibility if that happens. So we don't know which way it's going to go for sure, but we're aware of both sides, and that way if price fails at $1.90, be on the lookout. It might tank all the way to $1.30, which sounds hard to believe at this point. And on the flip side, if you're bullish, I mean, if it gets bullish, just buy if it breaks this high of $1.92. Simple as that. So now you know both sides of the setup, and good luck tomorrow.